Good morning and welcome to another episode of Trade Talks. My name is Leanne Alfaro and we are live from Nasdaq market site in Times Square, New York City. Joining me today are from Nasdaq Dorsey Wright, Jay Grignani and Tom Dorsey. Thank you both for joining us.
Great. My pleasure.
So we are going to be talking about looking at a market through a technical lens with you both. So could you tell us a little bit first about Nasdaq Dorsey Wright?
Well, Nasdaq Dorsey Wright in 2015, we sold the company to Nasdaq. It was a point at which, after 30 years as an entrepreneurial organization, Dorsey Wright, a technical analysis company, really needed to be with a larger Fortune 500 type company. And Nasdaq, this is the first technical analysis company that's ever been bought on the open market. And I think it put an exclamation point behind technical analysis that Nasdaq actually wanted to own a technical analysis company. So it was a perfect marriage between the two. Dorsey Wright was ready to take a step into more technology and a larger corporation.
Fantastic. And could you tell us a little bit about technical analysis? What is it?
Technical analysis is a way of evaluating stocks, and a good visual would be, let's look at a funnel. And if you took a funnel and took fundamental analysis and television pundits and all these information and stuff it down that funnel, in the end, the only thing that happens is price change. If there are more buyers than sellers willing to sell, price will rise. If there are more sellers than buyers willing to buy, price will remain the same, or price will decline. If buying and selling is equal, price will remain the same. So in the end, when it comes out of that funnel, it's price, the irrefutable law of supply and demand. That's where the technical analyst comes in, the price changes of a stock. And by looking at charts, it gives us a handle on whether a stock is in an uptrend, a downtrend, what's in favor, what's out of favor. It's a more extended discussion on this, but that's pretty much what it is.
Okay, great. And since you are very in touch with this information, what are some questions you're hearing from financial investors right now?
Sure, it's a good question. I'll take that. And we talk to advisors all day long. One of the things that we have done for many, many years, ever since the company was started, is supporting financial advisors in their business and their career. And we take calls from clients all day long, and a lot of the questions that we're looking at today is, what's going on with the markets, what's changing, and when we look at it from a relative strength perspective, in 2018, we've seen a lot more volatility increase relative to, say, 2017. And so a lot of the questions that we're getting today is about what's changing in the market and what's going to lead this market going forward.
Now, Jay, from a technical perspective, what sectors are doing well right now?
Yeah, sure. So as Tom mentioned, when we look through the lens of the point and figure methodology, and very specifically at relative strength, one of the leadership sectors continues and has been for a while now is the broad technology group. And when you look at broad technology, that's an area that tends to be more growth oriented, certainly an area that is ranked number one within our work. Right behind that would be financials, specifically some of the big banks and as well as some of the regional banks continue to do well. And the most emerging trend that we've seen within the sector perspective on the way up is energy. And energy, from the big, well-known energy names all the way down to some of the smaller exploration and production type of companies. But energy is the newer trend that has emerged out of this market here and out of this volatility here recently.
Great. And which ones are struggling? Which ones are not doing too well?
Sure. That's a great question, because a lot of times we focus so much on what we should be owning. We forget to focus on what things do we not want to own, what areas do we want to get out of the portfolio, and those areas that tend to be laggards. Right now, it tends to be things that come down to stocks that are more interest rate sensitive. And so you think real estate is certainly a sector that's right down there at the bottom of that list of areas that have been laggards. Utility stocks. Utilities continue to be among the worst ranked sectors. And then lastly, consumer staples. A lot of the big, large cap, blue chip type of names have been in negative trends for our work, have been, in Tommy's words, being controlled by supply for well over a year now. And so that's an area that we would continue to avoid within the portfolio, are real estate, utilities, and then consumer staples as well.
And you know what's happening? It reminds me of when I started in the business back in 1974. These are the kinds of things that the vision I have now is the way things were in 1974 and 75 and on through to 1977, 78.
Wow, that is interesting to see those trends come back again.
Yeah.
Now, where can people go to learn more about Nasdaq Dorsey Wright?
Sure. So, Tom, you are hosting a webinar on
great.
June 12th.
Yes, on the 12th, and it's going to be on point and figure charting. And I want you to sign up for this because your customers are going to begin asking you to buy stocks. Okay. There are so many advisors now that use modern portfolio theory, rebalance twice a year. The customers never see any stocks in their portfolio. They're going to be beginning asking for stocks. And I want you to come to the seminar and learn point and figure charting from the basics.
Yes. And we'll have a link to that webinar on business.nasdaq.com/Dorsey Wright, or if you search Nasdaq Dorsey Wright, go to the login page, you'll have a link right to that webinar. If you're a current subscriber of ours, there's a link right inside of our website once you're logged into that.
Perfect, and we'll have a link to that as well.
Yes.
All right, thank you so much, Jay, Tom, for joining us today, and thank you, Trade Talks followers, for joining us on another episode. Signing off.